Hey guys, Robert Lund here with Realty One Group MVP, and today I'm going to do something a little different, another educational segment where I'm going to go through some of the questions I've been getting a lot lately from my clients and some of the misconceptions I've been noticing from the mindset of buyers. And because things might be different in the state that you're in. You might be a first-time home buyer and just think things work a certain way when they don't. So I want to clarify this 13 things that I'm going to go through today. And believe me, on my channel, I've got a lot more of that on there. There's hundreds of hours of education. I've got all kinds of educational videos. I talk about all kinds of things in my model tours. So, make sure you're checking it out. Make sure you're hitting the likes, hitting the subscribe. Leave some comments, guys. It really helps the channel and it helps bring more content to you like this. So it helps the algorithm out, helps you, helps me, and it makes it better for everybody. So yeah, guys. So I'm gonna go through 13 things, and I think number one, which I've actually been actually went through this today with a client, and it was, basically and we've been negotiating. I've been negotiating with a couple different salespeople from different builders for different clients, and I've gotten the fact: is it like buying a car? It seems like it's like buying a car. They're like used car salespeople. That's somewhat true and somewhat not true, guys, because we'll say that buying a house is sometimes like buying a car when you're shopping for new construction, because there are so many different builders, so many different corporate structures, and the way that they train, they bring in like sales specialists to train the salespeople to basically make more money for the company, to get more sales, and to be negotiation experts like myself. I came from the car business, so I know the game, and I know I'm a professional negotiator. That's why you should have a realtor negotiating for you, because we know what to say, when to say it, what the thresholds are, what the limitations are, and how far you can take a deal, as far as like appraisals go, as far as max incentives that a lender will allow, as far as, where this builder is as far as like, can this home go for less than, say, that home, depending on the lot that it's on, or the square foot of the lot, or the price per square foot. These are all factors that are taken into consideration, and the timing and the tempo of the market, guys. So, and have rates gone up, or are they going down? Did the incentives go up? Did the incentives go down? Because sometimes it'll look like there's a big price drop, guys, but really it's just the builder playing with the numbers. And sometimes I can actually have them raise the price a little bit to give me more to buy down the interest rate. And I'm gonna get to that further in this video, as far as how that works, and some of the parameters with that. But there's so many different tactics to tackle a monthly payment. Down payments can be set in stone, or getting your closing costs compensated, guys. If you're tight on money and you need an expert like myself, watch this video, guys. Make sure you're reaching out to me at 941-879-4730. Robert Lunt with Realty One Group MVP. Check out robertlunt.com. I've got lots of resources. I'm updating my blog on there more regularly now. Somehow it blipped and I lost a lot of my blog posts when I transferred my website over to the new office that I went to. It's the same broker, but just went to a different office, different branch. And somehow when they transferred the website, I lost my blog. So I'm trying to update that more efficiently now and more relevant to the content that's on my channel. And I'll also link you to really good videos and different websites that are very relevant to what you're trying to accomplish looking for a home right now, guys. So I'll keep that coming. All right. Hope that helps. Number two, what are prepaids? When you see those on the closing statement or the estimate, what are prepaids and how are they different from closing costs? So prepaids, guys, this is it's your escrow. So when you're taking out a loan, this is for people that are financing, not for cash. So when you're paying cash, there are no prepaids. Your closing costs are relatively minimal when you're paying cash because you don't have the, the financing underwrite, all the like when you're financing a deal, you're gonna have doc stamps on the loan, you're gonna have recording fees, you're gonna have title insurance on the loan, you're gonna have some extra fees in there, guys, and you're gonna have you're gonna have your mortgage insurance premium, upfront fee for that. And then you're gonna have stuff like FHA and VA funding fees, guys. So keep that in mind. But the prepaids, okay, and sometimes the builders will give you a closing cost incentive, and it won't include the prepaid. So they're like, we can't give you the prepaid. Some builders will take care of the prepaid. Some say they won't take care of the prepaids, or it's just a policy. I don't think it's really set in stone, but with some builders, it's their policy. And the prepaids are your escrow. So it's your taxes and insurance. And it's usually like the first 3 months of that, they front load that account. And usually, it's like $5 or $6 grand, $4 grand, depending on the price of the house. Could be more, guys, and depending on the loan amount, really is what it is. So that's what the prepaids are, guys. So you may think like these are your closing costs, but what is this $6 grand over here? And it might throw you off. Like they want us to, pay these extra whatever it is, and you're not sure what it is, and if there's prepaids on it, and it may throw you off. So that's what that is, guys. It's really just money in the bank taking care of your stuff. So that's not money that's going to some fees. That's going to your property taxes, insurance, CDD, things like that, guys. So it's a necessary fee that cannot get, say, like waived or wiped off the statement. So it has to get paid. It has to get put in to the escrow account. And if we negotiate the builder to give you extra closing cost incentive to take care of that, then we can get that done. So any comments, leave it in the comment section below. Any questions, any feedback that you have on these topics, please leave it in the comments below. It really helps the channel, really helps the people watching, and it helps me to understand what I'm portraying to you. If it's the information you need, or if do you need more, right? Or if it's too much, right? Is it too much information? So, all right, guys. Number 3. Just because the home requires flood insurance, say it's in an AE, right? You have X, AE, A, different grades of flood zones. And just because the home is in an AE, it may require flood insurance. But that doesn't mean that the home is going to flood. So a lot of the times what happens is the builders, they put these homes like they'll redevelop a land that is in AE, right? They'll redevelop it, they'll pad it up, they'll put in the irrigation drains, the lakes and everything, the ponds everywhere, and it'll drain off into lowlands. It'll be all padded up. And it's all up to code, block houses, it's got plenty of runoffs, the water is not gonna come into the house. And sometimes maybe like before they get the replat from FEMA, that they're gonna have, it's gonna require flood insurance as it's stated right now on the classification for the property. But what can happen, guys, is that after they build it up out of there, then they get the maps replatted from FEMA. That's kind of a LEMA letter, a letter of Loma, right? So it's something with the elevation that they get. It's a Loma letter. They give that to FEMA, and then they rezone it, take it out of the flood zone, and then you can get rid of your flood insurance. So keep that in mind, guys. And sometimes, like if it's a bigger lot, or if the lot is backing up to a preserve, maybe a little sliver of the land will be in a flood zone, like will just be an AE. It doesn't mean that it's wet land, but it's in an AE flood area. And then what'll happen, guys, is they'll still want flood insurance, the lender, but with the elevation certificate given to the insurance company, then you can get that. It's relatively cheap, like $500 a year. So like maybe $40 or $50 a month, guys. So it's not that bad. So don't get scared by that. And on new construction, guys, your insurance is freaking low anyway. So it's usually like $1,000, $1,200, $1,500 a year versus a resale home, which is usually $2,000, $3,000, $4,000 a year. So it's not bad, guys. All right, number 4, guys. Is it better to take $30,000 off of the price or use that money to buy down the interest rate? What's going to have a bigger impact on your payment? So rule of thumb, guys, is going to be that any home that is, say, getting under financing and getting where the builder is going to give you incentives to buy down the rate, guys, the builder's only going to have so much flexibility that they can do with the price because it'll hurt the appraisals for the future sales. So there's only so much that they are willing to do because as a business standpoint, it's gonna affect them in the long term. So they would rather keep the price the same and give you the money for the closing costs and to buy down the rate. But there's a 6% cap on that, guys. So it's usually 6% is the max that you can get from a builder with that the lenders allow for a concession back as a seller credit. So that's usually the cap for all the lenders. Some loans on resale, it's like 3%, right? But most it's 6% when it comes to new construction. And it's going to be better because rule of thumb, guys, every $1,000 you take off the price is like $5 a month. So every $20,000 in price is like $100 a month, right? So if you took that same $30,000, that would be like $150 a month, right? It's going to save you getting 30 grand off the price. So it would bring your payment from like $2,650 to $2,500 a month versus if you use that to buy down the rate and you bought down the rate, say 2 points from like a 7% to a 5%, then that's going to do a much larger impact. It's going to take like roughly almost $500 off of your payment. So versus $150. So it's better to work it on the rate when it's coming to a budget and being able to afford a nicer home for the same payment rather than getting some cheap used house so that needs work, right? It's better to go that for at 7% interest. It's better to get a more expensive home with a 2-point less interest rate from the builders. And that way there, you're gonna have the same payment on a bigger, nicer, brand new home, guys. So I hope that helps. Number 5, guys, will interest rates go down? Everyone thinks like, I'll just wait till interest rates go down. So that's gonna depend on inflation, guys. It doesn't depend on if the Fed has a meeting and they're like, we're gonna lower the bond rate. You know what I mean? It has to be, you gotta have, basically what happens is if, inflation, if it's like over that like 3% or 7%, I don't even know what it is because I'm not an economist, but I know how that works. It's basically if it goes past that threshold, then the 10-year bond or whatever rates, they will increase, right? Which will increase interest rates, or they'll decrease depending on if inflation is good. If we're under the 3% year-on-year threshold or whatever it is, right? If we're tracking that, then the bond yield, the 10-year yield or whatever it is, will go down, and then interest rates will go down. So just because the Fed lowers, that's what you've seen that over the last 6 months to a year, where they said that, we're going to lower rates, but interest rates actually go up because inflation has not slowed down. So if inflation is not doing good, if you feel like you're seeing the price of things go up, and that's a good way to gauge that. If you go to the grocery store, the price of food, the price of gas, the price of things that you buy at the store, price of labor is going up, then and guys, another thing, minimum wage is not going to go down. So once it goes up, it stays up, and that kind of keeps the price of everything up to a certain extent. You know, the government's trying to manage things and try to like come in from different angles with these tariffs and trying to get the, you know, like more dollars staying in the United States and trying to get things kind of under control as like a you know, and like a long-term thing, but in the short, probably short-term inflationary, right? So short-term inflationary, long-term deflationary. So right now you're probably going to see some, you know, a bit of things going up and kind of going all over the place, depending on what industry, where you're at. But I think inflation is staying pretty steady, if not still kind of on the rise. So at least in the short term. So I wouldn't bank on interest rates going down or going down dramatically anytime in the near future, guys. So keep that in mind. You know, maybe in 3 or 4 years, something like that, you'll see a little break, but then prices are gonna take effect on that too and probably go up. So just keep that in mind. Is it better to build a home or inventory, guys? So when you're building a home, you're gonna have things like picking out, you know, maybe like a better lot, picking out some of your upgrades, right? But a lot of the builders, they don't really have that even on to be builds nowadays. Most builders are inventory builders because of the economy and the interest rates. So they need to get a better deal on the materials. So they order them in bulk and make all the houses kind of like the same, or, you know, a combination of 2 or 3 or 5 different packages, up to 5 different packages. It's pretty much what I'm seeing now, but usually a lot of builders are doing all one package. You know, they might have 2 or 3 different variations, especially the larger builders that are doing the volume with the big incentives. And the way that they do that, when they buy down these rates, guys, they're doing it like 60 days, 90-day rate locks. They're buying packages of loan discounts. So it's not like you're getting, you know, you're not getting that high rate, guys. Or you're not paying 7%. You're paying 4.99. You're getting all your closing costs paid typically, right? And if they're not, you know, you gotta get someone like me, and I help negotiate that because I know what their thresholds are. I know how far they'll go, if I can push them farther, what the tactics are to get them to go further. And I know their systems because every builder is different. They all have their different ways of negotiating, their different methods, their different policies, different stances on the way that they do business, because a lot of them, it's their branding. So they have it, you know, they want to be known like that. Some builders want to be known like that. So they have their procedures that they train their salespeople on. And I know which builders I can push around a little bit more, which ones I can pull on, and which ones you're going to get stuck or which ones is just a great deal out the gate and they're already giving you a max incentive, guys. And then that's better than the competition in the area. So keep that in mind, guys. That's why you always hire a realtor like myself when it comes to negotiating with builders and determining which is the right path to take. Because you might want to go to be built if your timeline is out and you need time to sell your home. That's the time that I can get you extra time to sell your home when they got to build the home, when they got to build the house from scratch. And that you know, and that's a situation for a lot of people right now all over the country that I'm dealing with. So keep that in mind, guys. I hope that helps. If you have any more questions about that, shoot me a text, leave it in the comments below. Thank you. All right, guys, number 7, another common misconception that I get in question that can be tricky to gauge and judge in the market is you think prices are going down. Oh, the market's falling. The market's falling. Prices, there's a price cut, 20,000, 30,000. So that it can look like that, guys, but don't think that that's the way it is, because what happens is a lot of the times these builders, when they finish a home, they've got it, while it's being built, it's at a certain price. So it's at like, say, 450,000, right? They've got some room there. And when the house is finished and no one's put it under contract yet, they'll make that, say, the home of the week, and they'll drop it, say, $30,000. Or sometimes, and it'll look like, oh, the price is the market's falling, right? Because they had a price cut of 30,000, and then another builder next door with a similar house You know, they dropped the price because they changed their incentives. So they went from giving a $30,000 incentive to giving a $10,000 incentive. So what they did was they dropped the price 20 and gave you 20,000 less in incentive. And then, and so it looks like they're just playing with the numbers, guys. So don't be fooled by that, because it does not mean that the market is falling out. Some prices I see that are going up, like the bottom is coming up, like the cheapest houses, they're going up a little bit. Some of the more expensive houses, they're coming down a little bit. But the really nice houses and the nice builders and the nice lots with the nice floor plans, they're holding their prices and they're selling. So keep that in mind, guys. And also that sometimes there's so much competition, say in Florida, they're building everywhere. There's so many builders. Every blank piece of land is being developed right now as we speak. There's a huge boom going on in Florida. And you got to think, it's a little bit oversaturated, but the reason that is because there's a high demand. So these houses are selling. They are selling, just not as fast as they're building them. And what's happening is that the undesirable lots are kind of sitting there, you know, because they have all different kind of lots, and there's so much inventory that they're building, because every one house they're selling, they're building two, right? All the good lots are getting bought up for pretty much top dollar. And then the bad lots and the back-to-backs, you know, they're on like, say like a main street or something like that, or like an ugly marshland or something. Those ones are sitting on the market and they're dropping the prices on them because they built like 3 of them right there around that little ugly area, right? Or on the power lines or something like that. So I hope that helps. Number 8, guys, why are there so many houses on the market? And that kind of goes back and piggybacks off number 7. If you heard what I just said on that, you know, why are there so many houses on the market? Because the builders are building like crazy. If you look, they're mostly all new construction. And the ones that are not new construction can't compete with new construction. So their houses are sitting on the market because they have outdated layouts, and they're trying to get the same price as the builders, right? But they can't offer the same package the builders offer. The builders are giving you brand new everything. So you don't have to do any work. There's no mold in the house. They're giving you a full warranty. They're buying down the interest rate. They're paying your closing costs. The insurance is usually always lower on a new construction than the brand new codes versus, you know, 10 years ago codes or 20 year ago codes, right? So the insurance companies like that better. It might have better windows, might be have a better elevation, things like that, guys. But that's why it might seem like houses are sitting on the market, but say not in an area that's like desirable where there's no new construction. In those areas, houses have a lower days on market. But when there's a lot of builders in the area, then you're gonna have higher days on the market, because it's very hard, if not impossible, to compete with the builders unless you have like a swimming pool, or you say like on a cul-de-sac or in a specific location that's very desirable. Those ones will sell a lot faster if you're priced right. So people will compromise for price. So trust me, guys, you got to be priced right, and that's how you get it done. Talk to me, guys. Number 9, guys, is why won't my house sell? So that piggybacks off of the last question I just answered. So make sure you're checking that one out, guys. If you're on my shorts, looking at these little clips that I'm posting, I've got a lot of these coming out, frequently asked questions. But why won't my house sell? And that's kind of like, you know, goes back. It's the high interest rates, guys, and you're competing with the builders, or you're just trying to get too much of a price, or you made a mistake and you listed too high coming out of the gate, and then you didn't listen to your realtor. You wanted to get a little extra, and now it looks like there's something wrong with the house because it's just sitting on the market. Usually those fresh, you know, those first couple buyers, right when the house gets posted, it gets sent out to all these people, and that's when they become the most curious. They're like, okay, let's get this one before somebody gets it because it's priced really good, you know. But if it's priced too high, people are gonna look at it like, it's a nice house, but, you know, they'll keep looking around. So, but if they've been looking and it's a good price, they're gonna know it's a really good price, and you're gonna get people to your yard very quickly. Or if you got a swimming pool, right? So if it's just some basic house that's just like every other house and for the same price, or it's competing with the builder who's offering great closing cost incentives, a low interest rate with a brand new house so you can get low insurance and a full warranty, guys, you're not going to be able to compete with that, guys. And that, because it's not like it's taking them forever. They've got the houses ready to go nowadays. So it used to be like you could sell your resale when it was a seller's market, but now it's a buyer's market. So when it's a seller's market, guys, it means that the sellers are kind of in the driver's seat. Their houses are selling fast. They can ask whatever they want. Now it's a buyer's market where the buyers can ask for whatever they want. So that is a good thing for buyers who need like closing cost incentives that maybe the builder isn't offering, guys, because we can really beat or if it's an investment property and you're paying cash, because we can beat those people up that on the resale market, and because they think they're gonna, they paid $250 for the house, the market doubled, they think they're gonna get $450 competing with the builders who are selling them for $450, and it's not gonna happen, guys. So if they really want to sell the house, we can offer them $400 or $375 and play the game, guys, and get a really good deal, especially on an investment property if you've got cash and you're buying it like that. So keep that in mind. All right, next is, how does the financing contingency work on new construction, and how does that protect my deposit? So typically in the contract, it's gonna say you have 30 days, okay, for the loan to go through underwriting and get your clear to close, your full loan approval, guys. And if you do not get that, and if they can't approve you for the loan, then your deposit is refundable, guys. But if you go through and after 30 days, now it's like 5 months down the road and they're still waiting on things for you, you didn't get them everything that they needed, then they have the right to exercise that contingency and say, guys, it's been over 30 days, we're gonna keep your deposit. But then you gotta have somebody like me. So you wanna have someone like me because I always get my clients' deposits back. I'm not gonna say how, but I always get the money back. I always do. And I have a little trick that I use, and it always gets my clients' deposit back every single time. It's even worked on myself before when a builder's try to keep my deposit. Trust me, their attorney was calling me wanting to settle and give me the deposit back. Trust me. I've been in this business, guys, 9 years now. I've been 11 years doing investing. I know all the tricks of the trade, guys. So make sure you got the right guy in your corner right there. All right. All right. Next is, how does a home selling contingency work, and what does that mean? So if you have a home to sell in another state or in the state of Florida, what that means, a home selling contingency means that, and some builders will give it to me to where they'll give you 60 days to get your home under contract, and then they'll negotiate. They'll extend that, but your deposit will be protected and fully refundable. So if you go under contract with a home, they give you 60 days and you don't get it, but say it's slow for them and they're not moving the homes, they'll give you another 30 days or 60 days, guys. So as long as they show that you're getting a little bit of activity, you can show them with your realtor up there, you give them a CMA, you show them that the days on market or whatever, 60, 90 days on average. And then you show, hey, you've been doing open houses, you may have gotten an offer, didn't work out, you're getting activity on the home, and then you did a price reduction. They'll work with you guys. But a lot of builders will want to see your house under contract first, so they'll do a home to close contingency versus a home to sell contingency. So they want your home under contract, and then they'll put you under contract. But it'll still be a contingency that protects your deposit, guys. So keep that in mind. If you have any questions about that, leave in the comments below or reach out 941-879-4730. Hope that helps. All right, guys. Next is, will the HOA and CDD go up on my home if I buy it in a deed restricted community, in a community That's my EMF video. You should watch that video if you're gonna buy a house near power lines. It'll make you think twice. So guys, HOAs and CDDs. So they do go up with inflation. On your CDD, only part will go up because it's 50-50. And make sure you're watching my HOA and CDD video. But HOAs and CDDs will go up with inflation, and a CDD is in two parts. So you have infrastructure on one side, and then you have operations and maintenance on the other side. So now it's structured like where your amenities, you might see your HOA is only $100 a year, right? Or you have like a no CDD community, and now your HOA is 110 because that's covering the amenities. But if it's like no HOA barely, then usually that's just covering the grounds maintenance, and then the operations and maintenance part of your CDD is covering staffing, swimming pool maintenance, the gym, the playgrounds, the trail, stuff like that, guys. So over time, and then the other half, the infrastructure part, that was a bond that was taken out to build the community. That's set, and you can pay that off early. So keep that in mind. You can go to the county, the tax collector, and get a payoff. So to avoid some of the interest, pay that off early. And then the other part will go up with inflation as wages and materials go up over time. But sometimes I've seen it go down. And when a community's fresh, it'll be a little bit higher on the operations and maintenance side. But then as more people get into the community and keep that account funded, it'll actually, and things go on with the economy. Sometimes they find cheaper ways to get things done. They find another, another company that's going to do a better job for less money. They work on to keep it, to keep it level or to decrease it if they can, guys. It's not like they want it to go up. So keep that in mind. All right, guys, last but not least. When do I start making my payments? Do I have to start making, when is all the money due for the deposit? So if you have a certain down payment amount, okay, typically we can negotiate that deposit, and we can pay it in increments, like $1,000 up front, a couple $1,000 more like in 2 weeks, or half and half, right? Sometimes they just want a $5,000 deposit. It depends on the builder, guys, but I can get them to work with us, and your payments do not start until the loan closes. And it's usually 45 days after closing. So if it's a 6-month build, your first payment's not going to be due for probably 7.5 months, right? If it's a quick move-in that you're going to close on in 60 days, say it's April, and you're going to close like the middle of June, then your first payment's not going to be due until August 1st. So keep that in mind, guys. And you do not pay, if you're building a house from scratch, you don't start making payments on the home while they're building the home. You're just paying your earnest money deposit, or if they want your down payment, it depends on if you're paying cash. If you're financing, if it's cash, they might want 20% up front. If it's FHA, 3.5% down, they might want the 3.5% over, say, 30 or 60 days. And some builders will just do a $5,000 earnest money deposit until closing. So, we can always ask. So whatever it is that fits your situation, your budget, and your timeline, guys, have a realtor that's experienced like me, guys, and we can work on that and get you the terms that you need. So 941-879-4730. I hope this was a helpful video for you guys. Make sure you're reaching out to me. Check out robertlunt.com. I'm updating my blog on a regular basis now, and I've got some great content coming on there. I've got the home search. I've got the new construction search on there. The home search, it follows your location. So wherever you're standing, it'll bring all the homes up that are right around where you're standing. The new construction tab as well. my blog. I have the mortgage calculator if you want to understand payments, guys, and stuff like that. If you want to know how to calculate payments, I have a great video for that, guys, on how the lenders will calculate what you qualify for. And if you have a question about that, guys, make sure you're reaching out to me, 941-879-4730. Hit the like, hit the subscribe, guys. Comment below. It helps my channel. Put your notifications on, guys. You could share this video with someone who needs it. I really appreciate it, guys. But more so, I appreciate you calling me when it's time to buy or giving the builders my name, taking advantage of my $2,000 rebate, my listing discounts if you're buying with me, and my free tenant placement service for investors. And I give you a free lease. I screen your tenants. I put it on there for free. So I'll either do the $2,000 rebate, or I'll give you that free tenant placement service with the lease, guys. That's a huge service. Usually I charge a half a month's rent for that. So I'm cool, guys. So I'll work with you guys so we can figure it out, whatever works for you. And if the builders are giving me a commission bonus, I'll share that with you as well. I'm not a greedy person. I work hard, take care of my clients. I'm for the people, guys. So call me at 941-879-4730. I'm low pressure. Shoot me a text. Hope to hear from you soon.